Hey guys, what's up? Welcome back to the channel. Average Trader here. Just wanted to put out a quick update video for you guys on this Aussie dollar short trade that we're in. Just talk about what we're doing with the trade today before FOMC and how we're going to manage it going in towards the end of the week. A couple of other things I wanted to talk about too. Got some news stories I wanted to share with you guys that I thought were important. A little market update and a few other trade ideas that I was thinking about towards maybe the end of this week or into early next week. So let's get started with all that. If you like the video, I'd appreciate if you like and subscribe below. And if you have any questions from me, I'd be happy to try and answer anything I can in the comment section below also. So the Aussie dollar short we were in from Sunday night. Yesterday looked like a pretty good day. We got a sell-off in the Aussie dollar from this 70, 45, 50 area. And we sold all the way off down to just below the 69 level. So we've got about 145 pip move out of it. And in yesterday's video we had a nice profit. We were sitting on almost $300 of profit at one point. I did mention in the video normally I would look to start taking some profits off here, but I do have a firm belief that this Aussie dollar is quite lofty up here, and I would like to see a little bit of a move back down. Even if the Aussie dollar wants to go higher, if it wants to go up into the 70s, fine. I just believe that if it wants to go higher, it's going to go higher through a lower level first. So I mean, I'd like to see a pullback 70, 67, 66, somewhere around this area would be perfect, and if it wants to go higher from there, then that's fine. So I was holding out for a bigger target, and yesterday my plan was to just sell any pullbacks in the move. So once we got up to this area here, we've seen a little bit of rejection of the mid Bollinger Band on the 4-hour chart. I added into the position, I added a few positions here, and I just put some stops above the highs here where we rejected the area. We started to see some continuation actually, and the trade was looking pretty good up until yesterday afternoon when the Americans came online. And then we started to see overnight as well this kind of rejection, a little bit of a sell-off on the dollar. So those positions got stopped out, and we're now in just $41 profit at the moment. The reason for the dollar weakness overnight has been due to this talk about yield curve control from the Federal Reserve. The FOMC is obviously meeting tonight, and I think the market is expecting that there's going to be an announcement that they are going to be undertaking operations to control the interest rates in the bond market. It's probably going to happen. It makes sense that they would do it at this point, especially when we've seen a little bit of a spike in the bond market earlier on in the week. So it's a bit of a dollar negative, this. I think the reason is because I'm not 100% sure, but I think it's because it just makes the bonds, the US bonds, a little bit more unattractive to investors. So I think it's a bit of a dollar negative in that regard. Now, one thing to say on that is, even though it is a dollar negative, the only other central bank to have undertaken this type of operation is the RBA, the Royal, the Reserve Bank of Australia. They have undertaken this similar yield curve control operations, and it hasn't really affected the Aussie dollar too much. Obviously, we've had continued strength in the Aussie dollar throughout the last few weeks. So I'll be interested to see how the market reacts tonight. Obviously, there may be pricing this in now at the moment, and that's why we're seeing more weakness in the dollar. We may have kind of, once the conference is over, we might get a sort of sell the fact type move, or we may get maybe a little spike higher after the little bit of dollar weakness, and then maybe a sell off afterwards. Obviously, it's not set in stone, so there is a possibility that they don't announce this tonight, and then in which case I would expect to see a move into the dollar afterwards. So the plan for this trade for me for the rest of the day is basically do nothing. I'm hoping that we don't go too much higher than this area. I wouldn't like to see us break this previous high from Monday. If we do break above this previous high today, then I may start to consider to close some of these positions in here, and then we'll look for an area up higher to reshort the position. So we just close these out for a small loss, and we'll add into the position up higher, and hopefully we'll get a further sell off afterwards. The other possibility is that we may get some sort of like double top formation here. I'll be watching the price action to see if that looks likely. If it does happen, we'll play for that, and we'll put some stops above the highs and try and see if we can get a move back down. And option number 3, what's behind door number 3, is maybe a little bit of a head and shoulders formation. So we'll be looking for that also today, and we'll be acting accordingly. So that's the plan for the Aussie dollar. I would prefer to be going into this rate decision FOMC meeting tonight with a little bit more in the tank, as it were. You know, I'd like to have the price down somewhere around here. So if we do get a spike in the dollar, I'm not going into negative territory. You know, obviously yesterday things were looking really good, but you know, we just have to deal with it. We'll just manage the trade, and hopefully things will go our way. On the news front, a couple of stories. Just yesterday, I think this one sort of went under the radar. There was a bit of a sell-off yesterday, so maybe, you know, there wasn't too much attention paid on this because the market was already sort of selling off yesterday. But April US wholesales minus 16.9% versus 2% expected. I just, this line here, this is a record 1 month loss, doubling the worst month of 2008. You know, so it's interesting. You see these kind of headlines all the time, and then, you know, you see things like this, you know, US, Fauci says COVID-19 is his worst nightmare and it's not over yet. You know, in a period of 4 months, it has devastated the world. And it says here, he quoted, an efficiently transmitted disease can spread worldwide in 6 months or a year, but this took about a month. So, I mean, these kind of headlines, US coronavirus, Texas virus hospitalizations have hit their highest since the outbreak. So, you know, there's negative risk across the board here. Deutsche Bank have cast further doubt on the US, on the strong US jobs figures. That's something I talked about on Sunday. There was a few news articles after the jobs numbers came out on Friday, just questioning the accuracy of the figures. I think it's pretty obvious. I mean, there is no concrete evidence at the moment, but I do think it's pretty obvious that those job numbers were a crock of you-know-what, because it just doesn't make any sense. You can't have every Thursday millions and millions of people filing for unemployment, and then at the end of the month you say, we added 2.5 million jobs. It just doesn't make sense. It's ridiculous. But it gave Trump and Pence a good headline for their campaign, so, you know, I guess it's job done there. Anyway, I'm just saying, you know, you see all these headlines, these negative headlines across the board, and then the next headline you see is NASDAQ at 10,000. You know, it just, what's happening, you know? I mean, it's crazy what we're seeing at the moment. The markets are, you know, in autopilot mode, super bullish autopilot mode, and it just doesn't make any sense to me at the moment. You know, look, I get it. The central banks have flooded the markets with money, printed money, like it's going out of fashion. I know the money has to go somewhere. It's found its way into risk assets, and we've reinflated the biggest stock bubble in history. Where does it end? I don't know. I really don't know. It's going to be interesting to see. I mean, I was looking at this chart yesterday here. Just refresh that. Of course, now my internet is letting me down. Okay, we got it working. Internet just popped out there for a minute. So yeah, this is crazy. I mean, look at the NASDAQ. I mean, yesterday we went above 10,000. Obviously, just showed you that in the news story there. But I mean, could you imagine back in March, when we were, you know, in the height of the beginning of this pandemic, and we were going into lockdowns and all this kind of stuff, and on June the 9th, you know, 3 months later, we have headlines like this. You know, we have this top infectious disease expert talking about the virus being his worst nightmare. We have numbers like this, the highest Texas hospitalizations from the coronavirus. And then, if someone told you back then that we would see those news stories in June, and this is what the NASDAQ would look like, would you believe them? I don't think anybody would. It's crazy, you know, it's crazy. I don't know where this is going to end, but I don't think it's going to end with happy faces. It's going to be ending in tears. Anyway, other than that, not much else on the news front story. We had a little bit of Chinese Australia rhetoric again. The Chinese are talking about restricting their investment in Australia, just upping the tensions here again between China and Australia. Again, the Aussie dollar seems to be ignoring this for the moment. Everything is just a dollar play at the moment. The dollar is extremely weak for the past few weeks. I mean, you go onto Twitter, you look at the conversation on there, it's like, you know, the Democrats and the Republicans. Half of Twitter is the dollar is going to go to, you know, all-time highs, and the other half is the dollar is going to zero. So I don't know which side of the argument I fall on at the moment. I'd really like to just see the dollar strengthen for a week or two until we get out of this Aussie trade, but it is very weak at the moment. We do have this trend line resistance coming in here down at 95.49, so we're not too far off that at the moment. We might see a bounce there. We have broken the 78.6 fib that we talked about earlier on in the week, so this is the next area of interest down here. There's a bit of a level as well just below that area at 95.88. Again, I just think it all depends on what happens tonight with FOMC. So that's pretty much it for today's trades. We have a couple of other trade ideas that I wanted to talk to you about as well. So I'm looking at the Canadian dollar. I want to short the Canadian dollar, I think. So let's see here, just get that chart up for you. So yeah, dollar CAD has sold off quite a lot. Let me just remove that arrow here. So basically we've completely done the victory lap up and down all the way back down to the lows just before we had the COVID-19 crash. So I'm looking, I think this is probably a little bit overdone. I do think the Canadian dollar is a bit overvalued here. I'd like to see a move back up towards this area here around 137, 138. So I don't think I'll take the trade just yet. I'll look for some more signs of a bottom here before we do, just because I'm already in the Australian dollar. If I wasn't in the Australian dollar and I didn't want to, I didn't have already some risk on the table, let's say, and I had a few more bullets in the tank, I would probably just start long in the Aussie, dollar CAD here, and then I just manage the trade as we go along. But just because I'm already in the Aussie dollar and I don't want to end up in $2 long trades, for now, I'll probably just hold fire. But if we do start to see some sort of semblance of a bottom around here, or we move down to this area here, this previous high, let me just show you this here. Yeah, so this level here, you know, you see this level coming in across here at around 133. If we see a move down there, then we might just reconsider. We might just take a punt on this trade and try to go along. It's one to manage. Euro CAD is another one as well, or the Euro short. I don't want to keep long in the dollar though, so I like Euro CAD. Euro CAD short could be an interesting one. Let me see. Euro CAD. Yeah, I just found it interesting that the Euro CAD never really undone what happened after the crash, you know. So we've held this daily moving average pretty much the whole way up. We've bounced off it twice now and moved a little bit higher. So I just want to monitor what's happening here. I might start to look for some longs back up towards the highs here. I do like the euro at the moment. I think, as I said earlier on in a previous video, the ECB did a good job this week, and I think people appreciate that, and I think that the euro long is probably a good trade for the next couple of weeks. So that's the one to keep an eye on. But if I do decide to take any of these trades, I'll come back with another video and we'll do a little bit more of a deep dive into it. For now, that's the update for today. Just as I said before, guys, any questions, drop them in the comments section below and I'll be happy to answer them. Thanks very much for stopping by and watching my video, and I'll see you tomorrow. Bye bye.